Well, starting with the first session for today, we're talking about a trialogue, the topic being Fintech, real impact or just innovation. Well, the dignitaries joining us today truly will create that impact and have been leading the innovation. So I think they are the best minds to start off with the day two of the Global Fintech Fest. Starting with the moderator, we have with us Mr. Kunal Shah, founder, CRED, and the speakers being Mr. Neelkanth Mishra, Chief Economist, Axis Bank, and Head of Global Research and Managing Director, Axis Capital, Axis Bank, and Ms. Ashima Goyal, Professor, Indira Gandhi Institute of Development Research. Let's call upon our dignitaries with an enthusiastic and a big, big round of applause.
Good morning, everyone. It's good to see most of you made it with all the traffic situation over here. I decided to come here. I came at 8:30 a.m. to just avoid all the traffic after what I experienced yesterday. Welcome to this panel. I'll just quickly introduce my co-panelists over here. We have Dr. Ashima Goyal. She's a member of the Monetary Policy Committee of RBI and Emeritus Professor at the Indira Gandhi Institute of Development Research, Mumbai. She's renowned for her expertise in macroeconomics, international finance, and development economics. She has served on various advisory bodies, including the Economic Advisory Council to the Prime Minister. We have Neelkanth Mishra. He's the Chief Economist at the Axis Bank and Head of Global Research at Axis Capital. He's a top-rated analyst on macroeconomic trends. He's also a part-time member of the PM's Economic Advisory Council and chairman of UIDAI. Welcome. The topic is somewhat provocative, and as economists, you see impact and second-order impact much more clearly than most of us over here. Many of folks over here are from the fintech ecosystem. We are doing our parts, but sometimes not able to zoom out. So the endeavor of this session would be to kind of help, take your help to kind of really zoom out and understand this perspective. So first of all, some opening remarks from you on what do you think is the role of fintech and the impact of fintech that you have observed across any of the sectors that you have looked at? Starts with you.
Thank you. Thank you for the invitation and the opportunity to interact with the happening people. So talking as a macroeconomist and being involved in policy over the past few years, it's very gratifying to see that India has come out of major shocks well. The average rate of growth of the past three years is 8.3. And inflation, just as this MPC is concluding its term, is touched 3.5. So, and this is at a time when there's a lot of global fragility and issues. So now when you are in the finance space, and although India is doing well currently, the penetration, as I think Kunal was saying, is very, very low for many financial services. So maybe you could say that the economy is growing, and I think because of policy, because of increasing scale, because of diversity, better shock-absorbing capacity, and policies consciously making attempts to reduce volatility, to reduce risk premia, to be counter-cyclical, to damp, the trends that made the economy jump around earlier. So for this to sustain, for us to have steady growth, the role, you might say that as a finance person, you just sit back and there will be growth and you will do well. But this growth is not going to sustain without your efforts, to really increase financial inclusion. Because one very big risk is political risk. And if we don't have more and more people in our economy who are included and participate in the fruits of development, get good jobs, are able to get credit. Those who are typically excluded are able to do much better because they have finances available. So I think that is the big role of fintech, of financial services, in order to benefit from growth and to sustain it. So we come back precisely to sort of, again, to what exactly they might do.
Yeah, thank you again for having me here. And so I'll start off with this famous observation that I think was published maybe 5, 6 years back, that if it was not for the Jam Trinity or the India stack, India would have been 40 years behind on its measure of financial inclusion than it is currently. So financial inclusion as plotted against per capita wealth, per capita income, we are an outlier. And the reason for that is that because of the fintech progress we've made, we have brought down the cost of financial services provision, and that has allowed more and more people to participate in the economy. As we think about the future, we are our financial the size of the financial assets as a percentage of GDP is somewhere in the middle. I mean, it's not too low now, but it's also well below where the developed economies are. At the same time, if you look at financial services as a percentage of GDP, the value added by financial services, and this is something, which I would call as friction. I was telling Kunal just before our session that what you do and what I do at Axis Bank or Axis Capital is friction. We need to reduce the friction. So it kind of follows this kind of bell curve. So you start at a very low level, wherein your financial services industry is very small. And then because of innovations done by the fintechs, you increase the size relative to the economy. So you get more wealth involved, you get more payments involved, you get more insurance involved, and you get more debt going. You can dramatically expand the size of the economy. And as Ashima was saying, even to get more income inequality addressed, you need to have innovations which can get debt to the right people. So you do that, and your financial assets as a percentage of GDP start going up, and your cost of financial services as a percentage of GDP goes up. At the peak of the 2007-8 economic cycle in the US, it was as high as 9% in the US. And then, as the friction starts to get addressed, as the cost of financial services start to come down, you start to come down. So we are at the early stages yet. If we can somehow solve for this, we can continue to innovate, include more people, get more assets which are financialized. I think it will be an absolutely incredible part of India's growth journey.
This is super helpful. I'll just double click with the question that you talked about, the comment you made about how fintech or the Jam Trinity actually accelerated the country by 40 years or so. When it comes to taking an example specifically for UPI, I just wanted to take your view on this. We've just crossed 14.43 billion transactions in the month of July. It looks like we are clearly on our way to get to 1 billion transactions a day as well. And what is the impact from an economics perspective? Is there an impact to inflation? Is there an impact to speed of money moving faster? Is there, like, how to think about the real impact of this? Like, yes, it's made convenient life happen, but what are the second order impacts of a system like this coming in?
Yeah, so let me break it down to three parts. The first is in the cost of transaction. So what it does is that if there is a certain cost in even handling cash, and people think cash is free, but it is not, because you're spending time per transaction. And the minutes consumed then add to the cost. What digitization does is it significantly reduces the time for engagement. The physical security, I mean, the time at which you can operate, generally, I mean, this expands quite dramatically. The second part is that because it is so easy and cheap to do it, it starts to accelerate the process of formalization. And what formalization does is it allows for wider engagement. It allows firms to scale. Sometimes they may think that being cash and physical is actually much easier. But if you make digital very easy, then you get the room to start expanding. And then with that data footprint, and I'm sure many of you are solving it here, you can get access to more financial resources. So you get cheaper debt and all of that. The third aspect of that is what it does to the government tax revenues. And when we think about tax to GDP, the example I like to quote is that if you're living in a housing society and only 10% of the people are paying the maintenance bill, imagine the upkeep of the housing society. Now, if you can get it up to 25 or 30%, in housing society it should be 100, but anyway, but in the government case, if it is 25 or 30%, the state has many more resources to improve the quality of services that it provides. So I think the innovation and so the advent of UPI and the fact that it became so easy and so cheap to process digital payments has actually accelerated the process of formalization, has helped create the data sets which can be used to dramatically expand the pool of people who can be lent to safely. And thirdly, by providing this transparency, it is allowing the cheaters to act, or it is forcing the cheaters to start paying some tax.
Amazing. Uh, Dr. Goyal, I wanted to take your view on you've been closely associated as an academic with RBI and many big financial services companies. Uh, how do you see fintech? Like we already had banks, we already had NBFCs, we were already kind of doing a lot of digital work that both these entities were doing. How does RBI see the role of fintech, and what are also the concerns that RBI has in terms of we've seen a lot of guidance given to how to be more compliant, be more well governed. So how does RBI see this?
Right. I think this is what Neelkanth was talking about, the, the digital economy and the data and the reduction in transaction costs, the speed. So this is where fintech comes in, because it builds on all this. And sometimes I say it's like AI, for example. It's like mixing technology with technical, and people seem very different. You know, one is mechanical, and while a person, you need to know individual attributes. But I think AI now, acting on the kind of data available, allows technology to be personal. So I don't know, I'm sure some startup has done this, otherwise let me just put some wild ideas, which is that when we talk about financial inclusion, then we are, we know that people, like a street seller, for example, he needs money early in the morning when he has to go to the mandi and buy. So now that time, if through technology and his mobiles, he can be provided finance. And then he earns through the day as he's selling, and you can take back at that time. So time of the day, delivery of finance. And then because the time in which the money is out there is shorter, so lower the cost. So give it at a lower cost. So now this is, an example of how digital and so on increases efficiency, reduces costs, and enables business. Right? So it is a contribution of fintech, and I think what fintech can do, possibly do, or is already doing perhaps. But the concerns are also that when you talk to a lot of entrepreneurs in this area, they have ideas, but they don't have a well-formed, revenue stream. And sometimes they just sort of go in and do all kinds of things without having that backup. There was an entrepreneur I was talking to who said that the best advice she ever got was from Deepak Parekh, who told her that first you have something in your bank, a large amount of money. So this is like the regulations, you say capital adequacy. And people think that you are forcing us to keep idle money and you're not letting us use it, et cetera, et cetera. But that gives you so much security. It allows you to take risks. Otherwise, you're on edge all the time, allows you to sleep peacefully at night and implement your ideas. So the idea that you build a highway, a smooth highway with guard, where you can race. And if you race on a bumpy road, then you're likely to fall flat.
Thank you for that. Neelkanth, you also see this from a lens of a bank and also from how the markets are responding to some of these things. What's your view on what's happening to credit in general? And I'm talking about both consumers and businesses. We've seen UPI opened up credit to merchants, but I'm curious to get your perspective that if we have to really accelerate our path to Viksit Bharat, I think credit is going to play a very important role. What are the let's say, points of views or guidance you have for many of the fintechs who are here in the audience, and also some of the guardrails that you would want to call out?
Yeah, and actually, the question you asked, I think, is extremely important, and I would like to add to my first, the response I gave to the previous question, which is that in the context of Viksit Bharat, as you think about the progress for the next 25 years, it is important to remember that India is trying to achieve what has possibly never been done before, which is going through this phase that we are going through right now, which naturally increases income inequality as people shift from agriculture to non-agricultural work. There is a surplus of labor, there is a shortage of capital, and because of that, income inequality starts to rise. Now, when other countries were going through this phase, they were not democracies. So the US very famously was not a democracy till the 1950s. The UK did not have universal franchise till the First World War. Japan got it in 1924. China is still not a democracy. So they can live with 60% of people at $140, whereas the economy is so big, right? But we can't, we shouldn't. And I think a very integral part of growing, and if you don't do it, you will see policy reversals. So there will be so much political pressure that you will have to start undoing some of the more productive policies, right? And therefore, it's very important to carry everyone along. An absolutely integral part of that is how do you provide capital cheaply to small entrepreneurs? And that could be debt capital, it could be equity capital, but capital. Because if they, one of the reasons that in the past inequality in every economy has gone up at this phase is that capital could only be safely provided to a few large companies. It's easier to lend to large companies, to give equity to large companies. And I think this is where the role of fintechs and the role of the India stack and building new layers on top of what we already built becomes so important. That we can start providing credit based on whatever we have. We have data, we have finer algorithms. Now, you will see ups and downs. So it is not going to be a straight path. In fact, what we are seeing right now is that there has been a rise in delinquencies. There is a rise in NPAs. We saw a very sharp increase in lending in the last 2-3 years, and then now we are starting to see a bit of a correction. The regulator is starting to ask people to be a lot more prudent. We are seeing a lot of stress in microfinance. So you will always see these ups and downs, and I think we have to hold the course. We have to learn from the mistakes made in the past cycle. Retail lending is now much, much safer than it was 15 years back, and I think in the next 15 years it will become even safer than it is right now. And as we think about the policy and the guardrails, I think it is very important as a country to have an ecosystem where the private sector and the public sector, which is the regulators, operate in a trusted environment. That there should be less of distrust, that the private sector keeps grumbling about what the regulator is doing, and the regulator is upset with all the risks that the private sector is taking. And having a more open dialogue about real risk, because everyone is trying to achieve the same thing. Mm-hmm. I think if you have to focus on something, that is what we should focus on. Sometimes having an interlocutor, or what the folks at iSpirit, and they've done massive wonders for our economy, called the Sutradhar, that there's one guy who's one set of people who are driving a theme for 25 years, and that is they are trusted by the private sector and they are trusted by the regulators. Maybe we create an intermediary like that.
Amazing. Would love to get your comments on, at least from what you've seen recently. There was tightening on risk, and there is also some concerns that RBI talked about from the growth of credit. But how do you see credit playing a role, and do you see, for example, credit on UPI kind of getting impacted negatively through this, or we'll have to wait for the market to kind of become more resilient before we accelerate that and open the floodgates on that?
So I think there are two views. One view is that first you get everything perfect. It's the same thing with inflation targeting. First get inflation to 4% before you allow growth. I don't agree with that, because I think that it's a sort of unbalanced growth, or a dance, where everything is moving together. So credit, savings, that we don't have enough savings, so we can't have enough credit. Typically, if you look at the data in the past, Indian growth has never been credit-led. But This time it could be a bit somewhat different because of all the innovations. And this issue of NPAs rising, maybe in some personal credit. And so this idea of prudential regulation, that you tighten risk weights for particular areas where there seems to be too much exuberance. That means you don't have to raise rates generally, so other areas can continue to grow. And that the NPAs that have happened recently, they are not so worrying as happened earlier in the 2010s. Because, we are very backward looking. We think there were problems in the past, they're bound to recur. But it's very different. Today, the exposures that are rising are very small. The exposure, they're not giant exposures to big companies that are doing infrastructure. It's small guys. So it is something that can be absorbed. And moreover, a lot of banks are doing now risk-based lending. That means you're already covering for these NPAs. You've charged enough interest rates to be able to absorb some NPAs. So it's not going to bust anyone. And credit can continue to grow. If you're growing at about nominal growth of 15%, credit growth around that is perfectly safe. But overall in India, credit deposit ratios are much lower than in many countries in the world. The exposure of households and firms is much below that in other countries, while our governments tend to borrow more than is normal.
Makes sense. I'm going to switch gears to talk about the key ingredient to accelerate the per capita income. We are just at the $3,000 mark, but the truth is that female participation of labor is a big area of concern, and I don't know if many countries have managed to become developed with just one gender contributing to the workforce. I would love to get comments from both of you on first, what is this? Most people, at least when I meet founders or even investors, I was speaking to recently a very senior investor. I asked them, so what do you think is what percent of women work in India? And they said 60%. It seems to be a very fascinating thing that a lot of times we just do not understand the macroeconomic impact or the data. So I would love to get comments from both of you and how do we change this?
So I think women participation, there is a lot of change happening today. In the 2000s, we saw a steep fall in participation. So perhaps it was a U curve, which is that as family wealth grows, women exit the workforce. But also a lot of research at that time showed that they were going in for education and so on. And overall, we have to make the country safer for women to work. They should be able to go out safely, work at all hours. That is very, very important. But the recent data, the BLFS survey shows that women participation has really grown in the past few years. So we seem to be on the upper side of that U. I think things like girls winning medals, these small towns, it makes a big difference in terms of families being willing or seeing that women can achieve things. So a change in culture is also required. And this participation is healthy, but there is a controversy in research. We always have, I think, generally in debate. There's some people who say that it is just showing exploitation of women because it's farm labor that is increased, which is not very productive jobs. But there is another set of researchers who say that no, this is because men are leaving villages, migrating to towns, and therefore women are coming in and doing the work. And it is productive work. It is something that contributes. And it shows us that women are coming back into the labor force. So I think the society is in churn. There are all kinds of factors. So the families must be willing to let women go to work, and that is happening. And also this public safety facilities for women and opportunities. So I think we are on the upper side. We are coming out of this. Yeah.
Neelkanth, I just want to double click on some data points and please correct me if I'm wrong. What I have seen is that probably 95% of loans are still taken by men. 92% of all credit cards are still owned by men. At CRED, we see a very interesting pattern that husbands are paying the bills of credit card for wife also. They don't even come to the platform to pay their bills. I've been told by the founder of Zerodha that 99% of all assets that they see on the platform are owned by men as well. So I don't know if you, from a bank's perspective, do you see this changing? Because I understand from rural areas there is some upward curve, but urban seems to be going down. I don't know. I would take your perspective.
No, I don't think it is going down, but I think the observations are right. In fact, some of the payment aggregators also say that there is a disproportionate amount of males, meaning that the only way to get more people to adopt UPI and digital payments is to get more women to be using it, because there is I think it's a very high number, 70-75% is done by men. So, so starting with the crux of the problem that you highlighted, that look, unless you get half of the workforce into it and half of the adult population into the workforce and get them involved productively, there is no way that you can become rich before you grow old. Because this is a very important generation. The next 20-25 years is absolutely critical, because after that we cross the median age of 40, and then after that growing fast becomes very problematic. So we have to get more women into the workforce. It is very important, in addition to the factors that Ashima talked about, the cultural changes, the facilities, the safety and the security. It is also important to solve for the infrastructure at home, because there is a lot of work that the women do which don't get counted as GDP. I mean, for example, bringing up kids well is perhaps a much better asset build-up that you can do for the future, but that's not counted as GDP. And that does not give them the social status, so therefore, other challenges come up. But if you allow for more electrification, if you allow for pakka houses, you get toilets at home, you get pipe water, dense cooking gas, it all starts to solve problems. They start getting the time free, and which is why the first stage, as Ashima pointed out, is that they start going out to the fields and start doing some more work, because now they have more time free to go out there. From the financial sector perspective, I think it's a vexed problem. And I think it's to do with digital literacy, the fact that women are generally more risk averse. It is also about the unfamiliarity, and therefore I think focused schemes which operate on this. I don't think the ratio is dropping. Frankly, if I see the world around me, I think it is actually improving significantly. I mean, none of my aunts worked, all of my female cousins worked, and the wives of my male cousins work, right? So I think it is changing, but perhaps too slowly. And it is up to the innovators. Remember that large banks are very hard to change very rapidly. In the ecosystem, not just on how to process credit faster or safely, but also on how to get more women into the workforce or more women into the financial system. I think the innovation has to come from the fintechs. I mean, catching hold of specific use cases. Like, the government self-help group program has actually been quite productive in getting credit through to women in the villages. But still, that's too small for comfort.
You were making a comment.
Yeah, and I think I've heard that women take more risks, and in households, they're the ones who went in first for mutual fund investments and so on. Yeah? So I think it's not necessarily true that women are not, but your point about infrastructure is very, very important. There was a research paper of mine, which won an award in GDN, and that was about a household labor allocation, where women have to put in labor every 4 hours. So that makes them much less productive. They specialize in being at home. But technology, the internet, there's so many young women I know now who are doing business through internet. And that allows them, because it's learning by doing. Your productivity rises as you're engaged in some activities which are outside the house, and you can build skills. So therefore, you find, and as women earn more and have more resources, they will use the financial sector more also.
No, and when I said they have low risk appetite, it is not on the financial asset side. At least in my household, what you said is very true. I'm considered the risk-averse idiot. But what I meant was in learning to work with platforms which are new, and then being afraid that what if things go wrong. And I think that's where there's a lot of hesitancy.
But another, we see a lot of women in the working in the financial sector, banks and so on. You know, a lot of bank leaders have come from.
Yeah. I was with the US Fed governor for dinner 2 days ago, and I spoke to him about a topic that you have Fed now, which is a UPI equivalent, and it's not as successful as UPI. Why is the issue? And he made an interesting comment that we are a strict capitalism and we will not make it mandatory for them to join Fed now. So many banks have chosen to not be there, and many banks are only on receive only basis. They have no send activated on that. I wanted to honestly take a comment on from both of you. You guys see different economies and countries. I'm genuinely confused if India is capitalism or not, or I would love to get your perspective on that, both of you. And how does one see it? Because many of our investors are absolute capitalists coming from America and understand India. They invest in Indian companies, and they see all sorts of remarks coming in public from our politicians and so on and so forth. So how to really understand India for many of the people who are trying to invest in India, build in India?
So, look, we are a sixth of humanity. I don't think it is possible to drive one possible characterization which holds true for all of India.
Correct.
We are also an economy and a polity and a society in churn. And what we are seeing now is that even the bureaucracy is becoming a lot more market friendly and is starting to believe in market forces. And in private, maybe I can give you many, many more examples of how I have personally seen a very senior or many senior bureaucrats saying, the market forces are working, why are we intervening at all? And so we are still very tightly administered in too many things, but I think the movement is towards more trust in market forces. And frankly, if it was not for the RBI mandating and frankly slapping a lot of the large banks on the wrists because they were resisting UPI, it would not have happened.
Absolutely.
And so this is where I think the US over the last 30, 40 years, and you see the advent of the unelected bureaucracy and the technocracy and how it has expanded. And it has become a very big political point there. So I would say India I mean, there's a long way to go, but with the new generation of bureaucrats, with some of the new leaders, and the success we have seen, see, if you see that you are able to execute on this scale and the benefits you get out of it, I think the conviction with which with the next generation takes it up is much stronger. And frankly, India's politics still, it is starting to become, I mean, there's some issues that on the economic side that are coming through now, but largely it has been on the economic issues. I mean, politics is played on social issues, not on economic issues. So it is generally bipartisan.
Yeah, I think that India has outclassed many advanced economies in its payment system. Mm-hmm. Some of them are really, really, miles behind. And that is, we should all celebrate it as an example of innovation, which, as you were saying, took place because the regulators also pushed it. Yes. So it's an example of both working together. And I want to just conclude by saying that this is the hallmark of India. We're not a market system, we're not socialist, we have a lot of diversity, mixture. We are a mixture of different things. Mm-hmm. And we are a vibrant democracy, with actually 100% voting and inclusion. Yes. And that makes sure, currently the focus is on providing the less well-off with assets so that they can also participate. And working on making more higher productivity jobs available. So the democracy will ensure over time that we have some degree of equality and more people can participate, and that there is some help against the absolute kind of starkness of a market system, but also the efficiencies of a market system as well.
Perfect. We'll take a couple of questions. Actually, probably just one question if anybody has over there.
Thank you, everyone. My name is C.A. Seema Jain. I have one question regarding the CASA ratio decline In the Axis Bank, 47% to 43% is declined. So what, this is a red flag kind of thing about the thing. So how the bank or economy can resolve it?
So, okay, there are two issues here. You raised only one. The first is that deposits themselves have been growing slower than credit for 30 months now. This is the longest period we've seen that since 2007, when it did this for 90 months. But this is a problem of system money creation, nothing to do with the banks. It is because the central bank is not injecting enough money into the system, and that may be a policy stance, but it is because of that. Deposit growth is not slowing down because people are putting money into stock market or whatever. That also goes into the bank deposit system. So there is a problem with deposits because that is a regulatory and a policy-driven stance. On the CASA itself, you will divide into CA and SA, which is current account and savings account. Current account is a demand-driven system, meaning that a company will put money into something, into a current account where it earns nothing, only if it desperately needs to. So as supply chains have become more efficient, there is less and less need to keep money in the current account. So over the last 20 years or 18 years, it has been falling very steadily. So this is a continuation. Savings account is about the differential between the savings account rate and the fixed deposit rate. And if the fixed deposit rate and that gap widens, people have less incentive to put money into savings account. So once the savings accounts rates start to go up, remember that used to be 4% till about 5-6 years back. Then it fell to 3, and some banks are at 2.7. Bump it up to 3.5, you'll get more savings account. But that's a call that needs to be taken. I don't think it's that big an issue.
Guys, this is where we'll have to conclude our session. We are
So
out of time.
Kunal, apologies on that. I'd just like to intervene a little. The team has confirmed, if the dignitaries are okay, if we can just take a couple more questions.
If that's okay.
Would that
please.
be fine?
Okay, thank you so much. We saw the
Perfect.
time's up and you are being very obedient over here.
Thank you so much, Kunal, and I appreciate that.
Sure.
We're open to taking a couple more, starting with you, sir. So just your name and keep the question concise, and whom would you like it for? Thank you.
Yeah, sure. That's a wonderful session. Thank you, everyone. My name is Ujjwal. I have a question since the panel were discussing a lot on the need for capital for India, Viksit India and everything. So we have one system where we are growing in terms of technology. There's a lot of data and everything, through which we are enabling credit. I want to focus more on the asset side. As in the book, The Mystery of Capital, the Hernandez Seto mentions that we non-Western countries also have a lot of assets, but they are not monetizable, or they are not worthy of capital. I want to want your opinion on how we can enable these assets into capital, and how the capital can flow into the rest 50% of the India, which is, I think, roughly how Fintech sort of helps solve this problem. Thank you.
Sure. Thanks, Ujjwal. Did you address it to anyone?
Professor Goyal, if you would answer that.
Okay.
Thank you.
Okay, yeah, that's an interesting question. But here again, I think we are seeing change. If you look at the way savings are calculated in India, there's physical savings and financial savings. And one of the big problems currently is financial savings are going down as a percentage. So people say that this is, but what is happening? Financial liabilities are going up. So net financial savings are going up, and household physical assets are rising. And these physical assets, which used to be, households would invest a lot in gold, etc., which is locked up, but it is now building houses, construction is booming, other sort of assets. So and financial savings, even though they're going down as a share, in quantity they're rising so much, because with income, as your savings rise, just, I don't know, about 2% of these savings go into stock markets. And we've seen very different behavior. I was talking about diversity and less volatility. Earlier, stock markets were so dependent on foreign portfolio investment. As soon as it went out during any time of rising global risk, they would collapse. But last year, we saw a lot of global volatility, but stock markets kept rising because households are coming in through SIPs. And the idea of reducing costs, now mutual funds are looking to accept even 100 rupee SIPs, so that this can, and it's spreading through rural area. So household savings are getting monetized, coming into the financial sector. Thank you.
Perfect.
Sure.
And if I may take a
Sure,
shot
sir.
at it as well. See, what you mean is that the household assets are mainly real estate and land. And so why is that not getting financialized adequately? And I think what is required is digitization of land records, move to conclusive titling. Currently, we have presumptive titling. So when you buy a piece of land, you assume it's correct. What the government can do is move to conclusive titling. It's harder to do than just my saying it. But then the land becomes more transaction worthy. It's easier to transact. Real estate is the best to borrow against. But again, for that to happen, there needs to be much better data set on the value of land and buildings. It is only where people are buying in the bigger cities developed by builders that you have that security. Otherwise, the piece of house the house that we have in our village, what is its value? So having those standards is actually going to be the next level. And I believe Nandan's session on tokenization, address many of these issues and the direction of travel. I think it'll take 5-10 years to solve it, but that should be the way we travel.
Sure. One final question to the gentleman out here. So just requesting you with your name and concise question. Thank you. Apologies, if you can just get the volume set.
Thanks. My name is Sandeep Munka. I was curious to get both of your thoughts on, if you see countries like Korea, they have practically transformed themselves in one generation. And that followed with the rise of global conglomerates, the likes of Samsung and LG. Do you see India may follow a similar trajectory?
Not really. And see, the way the Korean model worked, and see, it was one, a dictatorship when a lot of these changes were happening. And Hyundai was making losses for 38 years, and then the state kept investing in it. Those kind of things are not going to be possible here. A private firm getting continued subsidies for 40 years, it shouldn't as well. And that's not the model that can work in a large country like ours. So I don't think that model is really the right one, where you encourage conglomerates to. Now, a natural development of conglomerates, so we've seen conglomerates go up and then die down, like the Shriram Group. It was the 5th largest in the 1970s. It's nowhere anymore. So conglomerates will rise and fall. Some of the conglomerates are rising right now, and so that creating some doubt about the model that India needs to follow. In a $4 trillion economy, which should be $8 or $10 trillion sometime, it is not possible for one or two groups to be driving that kind of growth. You can do that in a country the size of South Korea, not in India.
Yeah, I would just add that in some ways we are now at a cusp of change where we can really develop in one generation. And one similarity with South Korea is that today we are open. Earlier we were import substitution closed, but I agree with Neelkanth that we have much more diversity in the number of firms. People are very focused on the top firms in India, and they think that we have these a few large capitalists, but over the last few years, the firms that have made the most profit are the ones below the top one. So we have a large number of firms developing in India, entrepreneurs in the Fintech system also, which will support India's growth.
Thank you.
Thank you so much.
Thank you for being here, and this concludes our session. Big round of applause for the panelists over here.